This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Welcome to Bloomberg Businessweek Daily. We are across Bloomberg platforms. As you know, Carol Massar, Tim Stenivek, live here at Bloomberg headquarters in New York City on a day where we are seeing markets kind of an even split in terms of winners and losers, gainers and decliners in the S&P 500. So the rally, to some extent, if you look at the overall index numbers and where they are trading, that rally coming to an end.
Okay, but you know what? Yesterday we saw a new record on the S&P 500.
That's all good things.
All good things.
If you're a bull.
We're about 2% away from a record on the NASDAQ 100. There was some economic data that we got earlier today, and maybe it, retail sales, and maybe it changes the calculus of what the Fed's going to do come September. But we've been saying, Carol, a lot can happen between now and September.
Well, we talked to Rebecca Humkes, and we did get to, I think, get to this part in the conversation where she said every C-suite that she is talking to, they're concerned about the consumer. And the data that we got today shows, the consumer might be slowing down on spending. And we had U.S. consumer sentiment drop too for the first time in 3 months. So I don't know. Maybe things are changing.
Maybe. We're going to have more on this and also on what the markets are doing from Charlie Pellet in just a minute.
We are indeed. All right, we'll get to that in just a sec. Hey, our focus this hour on this Friday, an unprecedented economic isolation plan for Iran. The U.S. said to be getting ready to do just that. What we know, how it could impact a lot of things. This war, how it could impact global energy markets. That threat of economic isolation, it is, though, our most read story on the Bloomberg today.
Also among the most read, OpenAI's revenue run rate, a big change from last year. Rachel Metz is going to be joining us in just a few minutes. That's how Carol Massar pronounces it.
Whoa.
Yeah, that's okay.
No, this one caught our attention, so we really want to tackle it. Hey, and Friday Night Lights meets Lord of the Flies. That's kind of get your attention. We talked to the former Wall Streeter, was there for about 4 decades, turned mentor of high school athletes. He's got a new book out. He's an author as well. Yeah.
I got it right here.
Yeah, so it's going to be interesting to hear what he has to say. It's a great Friday story.
It is a great Friday story. And if you got questions for us or for any of our guests, you want to hang out, you just want to say hi, head on over to Bloomberg.com/AskRadio. This is a new feature. It's available exclusively to subscribers of the Bloomberg Terminal and subscribers to Bloomberg.com. Ask us questions, ask our guest questions. We'll pose them as we do get them throughout the program.
And we want to know, is it whoa or whoa?
That's
Ask Jason Kelly about that one.
Oh, I will.
Hey, folks, let's get you going, though, on this Friday and get a check on the trade in your top business stories. Here's the one and only Charlie Pellet.
All right, thank you very much, Carol Massar. Thank you, Tim. Here's what's going on. Yes, stocks are lower right now. The Russell 2000 index of small cap shares is higher. But I got to tell you, I'm running the weekly numbers on the Bloomberg 3 in a row. Right now, we have got the S&P 500 index on track for another weekly gain, despite the selling today. Looking at a gain right now of 0.3% for the week. You recall last week, what a surge there in the S&P, up by 3.6%. Bottom line, right now, just about 2 hours to go ahead of the closing bell. Stocks lower across the board. S&P right now down 17, drop there of 0.2%. Dow Industrials down 93, decline of 0.2%. Nasdaq down 105 for Nasdaq, a drop there of 0.4%. Again, the Russell 2000 index of small cap shares bucking the trend today, up by about 0.3%. The 2-year 4.16%, the 10-year 4.69%. Spot gold advancing 0.6%, 43.78 the ounce, and West Texas Intermediate crude 82.12 a barrel, up 1.1%. Brent ahead of the weekend 88.17, up by about 1.3%. Retail sales among the economic reports this morning, they fell in July by the most in more than a year as consumers pulled back on purchases of autos and at online stores. Today we're looking at Walmart shares down 0.4%, Target down 0.5%. Walmart and Target both report next week. Amazon today down by 0.6%. So again, recapping here, S&P 500 index trading down by 0.2%. The weekly numbers, though, looking at a gain. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Charlie Pellet, Carol and Tim. is a Bloomberg Business Flash.
It is indeed. No one does it better. Hey, Charlie, thank you so much. Hey, safe to say one of the most anticipated market events will eventually be, when we get them, the IPOs of Anthropic and OpenAI. On the latter, OpenAI is on track to generate annualized revenue of more than $40 billion based on its current performance. That's according to people familiar with the matter, roughly doubling its run rate from the end of 2025. That sounds like a pretty good jump, don't you think?
Yeah, but you know what?
What?
There's a lot of competition out there.
It's growing, right?
Yeah.
This market changes a lot.
And they have to be very innovative, too.
Okay.
Yeah.
So you caught up with Rachel Metz earlier.
I did. And I said, we got to get her back. We didn't get enough time with Rachel Metz earlier.
I'm glad we are doing more. Bloomberg News AI reporter Rachel Metz, she's out there in San Francisco. Rachel, it is good to have you back. We think this is our top story. Like, as the AI trade and narrative continues, trying to understand these companies as they change, as their valuations grow. Tell us about what we seem to know about OpenAI and some of these numbers that are starting to come out.
Okay, so there's a bunch going on here, right?
Okay.
We have, sorry.
No, I love it already.
It's a lot. So our reporting, me and Natasha Muscarenhas, what we have determined is that OpenAI's revenue has gone up quite a bit, especially when you compare it to the last figure that we were aware of from the end of the year, which was about 20 billion. So 40 or above 40 billion is where they're tracking at now for ARR, which is, I mean, that's a lot of growth, right? The other thing that I think is interesting here is it's not just coming from one piece of their business. Our understanding is that it is sort of across a bunch of different product lines. It's important to remember consumers still make up the vast majority of their users. It is also still the biggest part of their business. So some of this is in consumer growth. And you saw recently that their user numbers pushed above 1 billion active weekly users. So this would be growth in consumer in part over there. Then we're also seeing on the business side with their enterprise users, that has also been growing. And some of that is with Codex. So that is their coding product that they have been pushing and pushing to rival companies such as Anthropic.
Okay, and we know Codex is important and we know Claude Code is important. But on the consumer side, I'm just going to throw Carol under the bus here for a second. I think you said this on air, but I don't know if you did. Forgive me if you didn't. But you know, she's using these LLMs and she hits a limit on the LLM and just goes to a different one. And you know what? I do the same thing. I don't pay for any of these. I'll use ChatGPT. I'll use Claude when I run out of space on ChatGPT.
Can I just
I'll use Google's AI search overview. Like what?
You're right. But like, I was using ChatGPT and it involves a lot. Like, there's a big history at this point, and
So that's the moat for you.
I'm generating an image, and they'll say, come back to me in 23 hours and 20 minutes. And you know what I'm doing?
Or pay $20 a month.
And I'm not paying, but I'm like, all right, we're just going to wait 24 hours. That's what I'm going to do. But Tim's right. Like, they're telling you it's going to cost if you want unfettered access.
Of those billion weekly users, how many of us are paying?
Yeah.
Ooh, that is a good question. I don't know off the top of my head, and I will look into that. But
I don't know if anyone knows outside of the world of ChatGPT, right? Or the OpenAI.
Well, perhaps we can figure it out.
Yeah.
But I mean, we do know that an increasing number of people are paying for it because that is where some of their revenue growth is coming from. And we also know that their advertising business, that's also been picking up. So even if you are using it, not paying for it, perhaps you could still be contributing to revenue growth, right? If you're helping, not helping, but you know what I mean? Like if you're part of the advertising revenue going up. So we'll see. We'll see. And I will get back to you when I have more clarity on the split there.
Can I just, before we wrap up, because we know we have to jump off to another story, but you've got all these stories. OpenAI and Anthropic are increasingly focusing on a new metric they say is a more accurate reflection of the real cost and value of using their AI software. You've got that story out there. You've got ZAI to rival Anthropic, OpenAI, and coding with a new AI model, DeepSeek, quadrupling its...
There's a lot happening.
I know. So you know what it says to me, but you're the expert on this. It's just stuff is happening fast, and new companies, different companies, like, are doing stuff. So it is evolving, and who knows, I don't know if I can use the word endgame, but who ultimately, like, how this all kind of lands. We don't really know yet, or do we?
I don't think we do. I think it's important to understand that each individual model release is simply that. These models will be released, and then there will be another model that is released, and the company's aim is to make each one better than the last or different than the last. So it's a spectrum. We're going to see things continue apace. It is possible there will be quite a number of so-called winners here. You have a lot of companies, both inside the US and outside the US at this point, that are developing interesting technology and taking different approaches. So it's gonna sort of still be like TBD, I would say. And I think that there's going to be a lot of interesting stuff continuing to happen over the next year or two, especially if and when we see some of these companies pushing toward IPOs.
That's why we come to you to just set us straight. Thank you. Double duty. Tim, and then Tim and me together, and then maybe you'll do me solo in an hour. I don't know. We'll just keep it going. And then we'll have more stories. Love. Have a great weekend. Rachel Metz out there in San Francisco. She's Bloomberg News AI reporter. Now,
I was hoping one of her kids would come into the Zoom.
Did they?
They didn't earlier, no, but
I love when that happens.
There's always hope.
There's always hope.
There's always hope.
All right, so that is certainly among our most read stories. Let's get to another most read. It might even be still the most read on the Bloomberg at this hour. We're talking about how the U.S. will soon announce unprecedented economic measures against Iran, according to U.S. Treasury Secretary Scott Bessent, intensifying the Trump administration's effort to force Tehran's capitulation after almost 6 months of war. Secretary Bessent said all of this in an interview with Newsmax that happened yesterday.
We went from epic fury to economic fury. We are going to apply measures like have never been seen in the history of economic isolation on a country. It will be a combination of economic isolation and the continued blockade in the Strait of Hormuz.
That, of course, was U.S. Treasury Secretary Scott Bessent. I have to say, this is a soundbite, a comment that, or sound bites, I should say, comment that we've been talking about a lot, certainly here in the Bloomberg newsroom. For what this might mean, will it likely happen? We're trying to make sense. Let's head to the Bloomberg News Bureau in Washington, D.C., and to Bloomberg Economic Statecraft lead, Chris Kennedy. So, Chris, I feel like we're always asking you this as our first question. What do we know? What does it mean? Is something going to get some new policy from the U.S. on Iran, some new measures? Is it likely to happen?
Thanks, Carol. So I do think that we will see some new policy announcements in the next couple of weeks, as Secretary Bessent discussed in his conversation on Newsmax.
Weeks?
Well, I think he said in the coming weeks, 2 weeks or something like that. We'll have to see. But these are policy announcements. Now, what does that actually mean in terms of the practical impact on Iran? We believe that the U.S. already has the tools it needs to put additional pressure on Iran, but it has stopped short of targeting some of the key financial nodes that Iran relies on for both trade and financial transactions, primarily in China, but also in the Gulf. And the reasons for that are political. These are political constraints that the Trump administration is under. There's a real concern about potential retaliation from China if the U.S. goes after major Chinese banks, for instance. And those constraints will remain regardless of what policy announcements we might see out of the administration. So we could see some new sanctions policy announcements. We could see some additional action on frozen assets, for instance. Now, whether or not that's actually going to lead to additional pressure, and more important, if that's going to lead Iran to change its current posture, I think that's a separate question, and we're doubtful.
That's okay. Why are you doubtful? Because there's the broader question, too, about economic sanctions and whether or not they work, especially with certain regimes and regimes with certain characteristics. I think this one has proven, even though there have been changes at the top since February 28th, this one has proven that it doesn't change based on economic sanctions, at least according to what's happened in recent years.
That's right. I mean, it's certain that the blockade that's currently being imposed is enacting costs on both the regime and of course, the people in Iran. But we've seen this sort of max pressure economic isolation policy applied before, both against Iran and then also against North Korea in 2017, when there was a massive, really high pressure sanctions effort imposed by the U.S. And we saw that that didn't change the situation in terms of the political control of North Korea. We didn't see any additional liberalization, anything like that. And we've seen that Iran is quite adept at managing the pressure that's been imposed on it by the U.S. Certainly over time, the pressure can build, and knowing Secretary Bessent, he might be looking to put additional pressure on the Iranian currency. Iran is dealing with pretty severe inflation right now. But the reality is this conflict is existential for the regime. And so barring some mass uprising that really topples the regime from inside, it's hard to imagine a scenario where Iran agrees to major concessions based on economic pressure.
Yeah, and I mean, there's an interesting story already out on the Bloomberg today about how Iranians are struggling to afford groceries because of the U.S. squeeze on their economy already. But so they're already in a tough place. Chris, what do we know about the region and their support of possibly the U.S. Intensifying with economic isolation on Iran? Are they okay with this? I'm just wondering, because I'm wondering, does this just further escalate the war?
It could. So, of course, the details will matter. Mm-hmm. There are Gulf Arab countries that still serve as important nodes in Iran's ability to access foreign exchange, for instance. The U.S. has so far been unwilling to target some of these nodes, in part because these are allies of the U.S. So I'm sure some of these economies and countries are going to be looking at the details of what we see over the next 2 weeks. I do think that there is a risk, as you mentioned. We've seen Iran take a slightly more offensive posture militarily over the past few weeks, being willing to strike first. Mm-hmm. Now, if they are under pressure, we might see something like that happen again. I certainly think that is a more likely initial response from Tehran than capitulation, for instance.
Chris, I want to throw something at you that's not necessarily in your purview, but I know you've got an eye on it, and it's the idea of what we've been hearing from certain U.S. troops in the region, and the reporting around their experience, specifically when it comes to conditions abroad, the USS Abraham Lincoln. And I'm wondering if that leads the administration to make any changes to its strategy here.
It's pretty terrible, the reporting that we've heard, and it's a good thing that some of these troops that have been deployed for 9 months or so are returning home. I think this is certainly playing a role in the U.S. decision to focus more on the economic pressure and pull back from some of the military pressure, along with some of the other reporting about diminished stockpiles of defensive munitions in particular. So I think overall, certainly it's playing a role in this tack away from military pressure and toward economic pressure. I think the bigger question is how long can the U.S. sustain this blockade, for instance, and still be in a position to exert this pressure over time? Because right now it appears that Iran is playing a waiting game and they're willing to try to wait this out.
Yeah. Does it also show, I'm going to squeeze this in 20, 25 seconds, Chris, does this show that the U.S. is saying, our military supplies are dwindling, we don't have a lot, and this is what we've got to do to try and kind of bring this thing to an end?
I think certainly some people are interpreting that way. And of course, the leadership in Iran is very attuned to the reporting around these issues. So it definitely doesn't put us in a good negotiating position.
Yeah, it just the twists and turns. Chris Kennedy covering it all. Bloomberg Economics, economic statecraft lead. Hey, coming up next, we stay on the economy, the possible impact a possible U.S. economic isolation plan might have on Iran. We do this a little bit further, especially when it comes to energy.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red. Wall Street wrapping up the week, by the way, on track for a winning week. Stocks are lower. Signs of a slowdown in the U.S. economy, reinforcing bets that the Fed will hold rates steady to prevent further weakness. The S&P right now down 14, 77.84 where we stand. That is a drop now of just about 0.2%. The Dow lower by 0.1%, down 71.6. points. And to be sure, the S&P still holding close to a record. NASDAQ down 104 for the NASDAQ Composite Index. That is a drop right now of just about 0.3%. The Russell 2000 Index of small cap shares on a down day for much of the market. The Russell 2000 is advancing now by 0.4%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down 1.1%. The 2-year yield, 4.16%. The 10-year, 4.69%. And the 30-year, 5.26%. Gold up $29 the ounce. Spot gold at $43.79 now, up by about 0.7%. A rally for crude ahead of the weekend here. WTI currently at $82.34 a barrel, up by 1.3%. Barrel of Brent, $88.42, up by 1.5%. Tesla shares right now up 0.7%. The EV maker reportedly planning to unveil a new Roadster design with, quote, flying capabilities as soon as this month. That, according to the information, it cites 3 sources. Thrusters for this vehicle would be developed by SpaceX. Tesla shares up now by 0.7%. Couple of air mobility rivals are seeing a little turbulence as a result of this report. Joby Aviation down 4.3%. Archer Aviation down by 6.1%. I'm Charlie Pellet. Carol and Tim. That is our Bloomberg Business Flash.
All right, Charlie, thank you so much. So oil, we have seen it fluctuate a little bit today as traders weighed a U.S. threat to impose unprecedented economic measures, something we just talked about with Chris Kennedy. Those unprecedented economic measures, of course, on Iran. So there's some concern. The war that, of course, snarled everything that's going on in the Strait of Hormuz. And it's now 6 months, which I was thinking about this, and I was like...
Remember, it was 4 to 6 weeks, I think, was what it was.
Like in, out, not in, out, in, out.
Not Venezuela.
No, not even close. We want to head back to Washington, D.C., talk a little bit about the global energy markets and what this, if the U.S. takes these measures, what it might mean. Clara Gillispie is Senior Fellow for Climate and Energy at the Council on Foreign Relations, joining us once again. Clara, great to have you back with us. These economic measures, unprecedented economic measures that U.S. Treasury Secretary Scott Bessent has talked about. We know the U.S. has had sanctions on Tehran since 2018. We don't know exactly what this next step could mean. How are you thinking about it? What's your read on this, and what could be the implications when it comes to Iran and energy and global energy markets?
Absolutely. I'll say that I read the statement with a fair amount of both curiosity and also deep skepticism. One, the details just have been scarce on what this could potentially mean. And I think we've seen a number of times over the last, as you said, now 6 months, where the administration has periodically been very specific and bold in its rhetoric on potential measures it might take, and then quickly or relatively quickly walked them back. So some open-ended questions there. I think there are 3 things that I'm looking for in particular with next week, and the idea that this is when we would expect to be hearing more on them. 2 parts of it I think you and your prior guest have already touched on in particular. It's one, this idea of an extended blockade. Blockade itself wouldn't inherently be unprecedented, but the duration and how we sustain that is potentially the question. There's, of course, also the issue of sanctions. But I think, one of the things I'm looking at in energy markets in particular is that the Trump administration, from the president to a wide range of officials, have been very concerned and focused on this question of how to reduce Iran's ability to extract value or pain from control of the Strait of Hormuz. Now, we've seen a number of approaches that have been taken that focus on reopening the strait or coming to new diplomatic negotiations, other military use of force that haven't moved the needle, to be quite frank. But one of the other things I think we're starting to see more, and not just from the US, but from other economies and partners as well, is this focus on reducing the significance of the strait itself to global oil markets, thinking about alternative routes, but also sometimes direct ways to bypass the strait to reduce Iran's leverage.
But we're talking years if that's possible, not months.
Some things might be possible within the next year, but a lot of what we're talking about is the 2-3 year timeline is ambitious, but it is in some cases notably longer than that. So.
Are you predicting that we're going to be talking about a potentially closed or restricted Strait of Hormuz in a year?
I'd love to say no, but at this point, I think both producers and buyers are assuming that they can no longer hold off on considering that scenario. Even if the Strait of Hormuz is literally open, if there's a way to navigate the strait, if we've addressed questions about mines and tolls and other things, there's still a question about how willing you are to rely on all those conditions being in place still, and what your potential hedges or alternatives look like.
I do think about, too, the workaround, essentially, that the region is increasingly, we're seeing stories about and reporting out. We talk our own reporting, a wave of Middle Eastern crude making its way to U.S. shores, offering some respite to a market squeezed by wartime demand for American exports. At least 9 million barrels from the region set to arrive at U.S. ports throughout August. Things are moving around. Infrastructure, Gulf oil producers are turning wartime alternatives to the Strait of Hormuz into longer-term infrastructure developments, with new pipeline, port, and LNG plants reinforcing their peak Hormuz thesis. I haven't really heard that term. But I mean, once you start to make these investments and you do the build, you don't really go back unless there's a financial, I feel like, incentive to do so. But it feels like there's a lot more at play in terms of security and making sure this doesn't happen again, or they're not so vulnerable to Iran and the Strait.
I think that's right. And the question of, do countries go back and who are we talking about going back, I think is very much an open one. But there is this idea that whether or not the Strait of Hormuz may continue to play an important role in terms of how your exports could reach markets, you don't necessarily want it to be your only exit point. You don't want it to be your only strategy for this. Some benefits to both redundancy and also just in case opportunities.
What would that be?
So there are a couple of things that could be. The most straightforward and some of what we're seeing right now is in terms of alternative routes. So whether we're talking about different sea lanes, pipelines, those sort of things. Another way that you can think about redundancy or ways of increasing your insurance policy for a potential disruption in energy trade flows relates to storage as well. And we're hearing this from a number of major producers across the region, as well as importers thinking about ways to increase storage of oil and gas cargoes, not in the area, but potentially much closer to major buyers in Asia.
Yeah, I just don't see how realistically at this point the challenge that we've talked about throughout the last, again, I can't believe it's been 6 months at this point, has been that prior to February, things flowed normally through the Strait. Like, we're not even talking about the nuclear issue here, Clara, which is that's the whole purported reason for the U.S. and Israel to do these strikes. So now, go ahead.
Sorry.
Please.
I was going to say, not only are we not talking about the nuclear issue, it's interesting to see Vice President Vance come out as well and say that the concerns about what we're seeing in oil and gas markets, at least at the moment, is the U.S.'s top priority and concern in this conflict.
Yeah.
But that's I have no question though. I'm sorry. I'm just pointing this out as we've spent the first, 30 minutes of our program talking about disruptions to the oil market. We're not talking about a way to get Iran to, I know ultimately we're supposed to, Iran is supposed to move away from its nuclear program, but that has now been put on the back burner as a result of this. And I think that shows the power that Iran has over the Strait.
Absolutely.
Well,
I wish I had a better answer.
I wish I had a better question.
No, it's a really good point because I don't know.
Are we losing focus?
Well, wait. So stay with me for a second. Do we have to reduce our dependence on the Strait of Hormuz for oil so that we lose
as a world, or as the because it's the globe. It's not necessarily us. Like, we have oil
to kind of, because this has been an incredible weapon for Iran to to really bring kind of the world to its knees. The U.S. was somewhat insulated because our energy picture has changed a lot over the last couple of decades and what we're reliant on. But if we can reduce that reliance and find other pathways and straits and moving stuff around, can you then, once you get that done, really go back to Iran and say, all right, we don't really need you for that anymore. It's time to get rid of all of your nuclear weapons. And is that the process here? Or am I just crazy? You can say I'm crazy.
And some of this goes beyond me in terms of military strategists.
I know.
I think that the hope is to at least in some way take this off the table as a concern. I think, as you both got at too, who we mean when we say we is a really important item here. I mean, the United States in particular has significantly reduced its direct reliance and dependence on the Strait of Hormuz. We can still be negatively impacted when other economies do have their imports disrupted, whether that's talking about the rising costs of goods or other transit or just other vulnerabilities. We've also seen, I think, a number of major consumers already take action to reduce their reliance on the Strait of Hormuz, and I'm thinking in particular here about Japan. And then a number in kind of the emerging market category that are now not just flirting about with the idea of reducing their dependence, but talking about it in real, sincere, pragmatic, sometimes hard-nosed ways that acknowledge that reducing dependence on this will be something that generates a cost that someone has to bear. And are you asking consumers? Are you asking private households, industry to cover this? Is there a right role for government in that space? I think these are all active questions that, as you noted as well, don't necessarily get back to the question of what the ultimate outcome from the war itself might look like.
Yeah, and we only have about 25 seconds left, but is there one country you think that is thinking the best about not just reducing dependence, but looking for alternatives right now? Because they have to.
I'm torn because it's never just one country.
Yeah.
I'm most keen when I see multiple countries move in tandem. So in that case, talking about Asia in particular, there's notable work that Japan has done in this space, not just about Japan's own needs, but its cooperation with Southeast Asia. India has also been focusing on this recently about the question of how you move beyond Hormuz, with some very clear acknowledgement that's not going to be something that it can do alone. It's going to require partnerships and some really difficult work.
Well, and you follow climate too, and so you do wonder, climate pressures too are going to ultimately, and already are, seeking the world to find alternatives. Clara, always a smart conversation. Clara Gillispie, thank you. Senior Fellow for Climate and Energy at the Council on Foreign Relations. Coming up, we're talking about strike season. We'll explain.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ all declining. Right now, we have got the S&P 500 index moving lower on this Friday. We are on track for a winning week, however. Right now, the S&P 500 index trading lower by 0.2%. We've got the price of gold moving higher, up $32, $43.82 the ounce. It is up by about 0.7%. West Texas Intermediate crude, $82.48 a barrel, up 1.5%. Barrel of Brent, $88.68, up by 1.8%. And the 10-year right now is at 4.69%. The 2-year, 4.16%. The 30-year, 5.26%. Dow Industrials down 0.1%. NASDAQ down 0.4%. And again, the S&P 500 index lower by 0.2%. We're keeping an eye on Tyson shares. They are higher with the rest of the market down today. Tyson Foods up by 3.3%. It is closing more beef plants as a prolonged cattle shortage continues to force the U.S. beef packing industry's restructuring. Recapping, stocks lower, on track for a winning week. The S&P this week currently up by about 0.3%. Carol and Tim, that's a Bloomberg Business Flash.
All right. Charlie, thank you so much. Appreciate it. Well, talk about turning lemons into lemonade or a strike into a touchdown. And no, I know we're not mixing up sports metaphors or references. I've got 4 brothers, Dad. I know sports a lot. But we're about to explain what this is all about with the author of Strike Season. Joining us here in studio is Michael Eck. He's author of Strike Season, the true story of a team that played on when the coaches walked out. And it's more than just about sports. And I don't mean just sports, but there's lessons in here. He is the founder of the nonprofit Steer for Student Athletes. They provide mentorship support to high school student athletes from challenging circumstances. We could talk about that. And we're told that the proceeds from the book sales will be donated to Steer. Welcome, welcome. And you also, we should remind everybody, you've had, what, a 4-decade career on Wall Street.
He knows his way around the Bloomberg terminal.
He does, he does. Morgan Stanley, or no, JP Morgan and Citibank.
No, Morgan Stanley.
Morgan Stanley, forgive
yes.
me. Okay, Morgan Stanley and also Citibank. Welcome, welcome, welcome.
Well, thank you. It's an honor to be here, particularly under these circumstances. Yes.
Well, thank you. There's a lot going on. And, you know, it's funny, having done business news for a lot, I've always heard people, when they talk about markets, they talk about sports, the connection, whether it's keeping score, the wins, the losses, the strategy. Were you destined, always, you think, to write this book?
So the answer is probably. It has rattled around in my head for 50 years. It has been transformational for me, my teammates, the coaches, the union members that were involved in it. And so I had it as an itch, and I got to the point of my life in my Wall Street career which I could take some time and get the itch scratched out and on a piece of paper by hand in the first go around. So yeah, it was quite a process getting it out, but I'm glad it's out, and let you guys be the judge of how it is.
Well, we love it, and we're glad to have you here today. And I don't want to give away the whole book, but I do want you to give people an idea of what happened to your football team.
Take us back to Western Pennsylvania.
Yeah. So the shortest version is this is 1979. It's my senior year in high school at Mount Lebanon High School, hotbed of high school football in Western Pennsylvania. Has strong bias that we play the best high school football in that part of the country. And so this was the season. This was it. This was the season for our lives. We had about 15 D1 prospects. Wow. So a really talented team.
This is you?
That is me. Yes, that is me.
We got you. We got you.
We apologize for everybody on radio, but for those on YouTube and television,
that is me. Yes.
That is you. So you're, okay, so player.
So playing. And so this is the big season. This is the one which will dictate where we go, how we go, basically the foundation of our lives. We get through summer camp, through the first 2 weeks of practices. We hear as 16-year-olds, there's a strike talk, but we're knuckleheads. We're not paying any attention. They go on strike on a Tuesday. We practice and play another game on a Friday, and we think this is an extended snow day. This is great. It wasn't great. Saturday morning, we get a call from the coach. We met in a parking lot of a school that we all used to go to, and he says, I've made a decision to support the union. All the coaches have made the same decision, and basically they joined the union and canceled our season, effectively. We, as you can imagine, throw things, yell, scream. We gather ourselves, get in front of the board, and that was the ultimate trump card for the union, was basically you pull the coaches on the sideline, hotbed of high school football, board's gonna cave within minutes or hours. No one expected what happened next, which is the board said, we're going to allow these guys to coach themselves. We're going to put 3 administrators on the sideline, give them access to facilities, get them the transportation. And I say ignorantly, not arrogantly, convince the school board that we could do it ourselves. We've played football since we were 3, and we know practice, we know the games, we think we're talented, we can do it ourselves. Not knowing how hard that was going to be.
You had not read Lord of the Flies yet.
Not yet. But as my publisher says, this is Friday Night Lights meets Lord of the Flies. I did read Lord of the Flies. No one dies, as in Lord of the Flies, but it is, it's self-governance, different form of island on fields and practice fields and games. And there's a reason 16-year-olds don't coach 16-year-olds, because crazy things happen, both comical, as you'll read in the book, there's some crazy stories, and also dangerous. You shouldn't have 16-year-olds coaching 16-year-olds.
Yeah, I mean, talk about, though, I guess, a really tricky learning experience.
Yeah, and people that have read the book said, what a wonderful leadership. There was no planning.
Yeah.
There was no reflection. This was us getting together. I describe it as reading, reacting, and as captains and as senior leaders saying, if we don't do this, we have no tape, we have no college, we have no careers, we have no schools. One of my teammates played in the NFL, got 2 Super Bowl rings, so none of that would have happened. And so we basically devised ways, made every mistake known to mankind, and figured out ways to practice and play games.
Did it make you think? Did it form a view at an early age of labor unions and organized labor for you?
Yes. So, and I want to describe it in 2 ways. One, as a 16-year-old, it was antagonistic. What are these people doing? These were my teachers. My lovely little English teacher, who's 62 years old, is holding a sign calling me a scab, and I was like, what? So, as a 16-year-old, it was very antagonistic. As a 63-year-old who went back and did real research, met with the head of the teachers union, a gentleman by the name of Mark McCloskey, I now have a much, much better understanding why they did it, how they did it, the import that what they were fighting for. And I say, I hope when people read the book, he comes across as a.
But did it take you 40 years to come to that conclusion?
Yeah. It took me 40 years to come to the conclusion as it relates to our situation. Mm-hmm. From Pittsburgh, you're always more of a union person and a labor than you are with management. So that's always been a backbone of, I think, the Pittsburgh experience. But as it relates to what we were doing, I did not have an appreciation, and I do now. And it registered. I went back to my coach's home, and he has the same home he had, Baldwin Township, Mount Lebanon. Same places where we used to sneak over to his house to meet with him during the season. I say Coach Walker, who I dedicate the book to, he did not cross the line. He supported the teachers union, but he did not abandon us. And there's some.
That's a tricky, right?
It's a tricky. And he, we would sneak over to his house and through backyards into his basement and get once a week and get game plans. And this is going to sound, again, as 16, 17-year-olds, I said, you don't realize he's a human being, has families, he's got 4 kids, he can't send his kids to the school. He should have struck,
yeah.
and he did. But it's a much better appreciation now upon reflection than as a 16-year-old knucklehead.
Mike, we only have about a minute left. Like, who should read this book? Like, in terms of like lessons, I think about challenges that kids are facing right now, whether it's AI and coming out and wondering what,
So I've been challenged in my publisher. It's more than a football story.
Yeah, it is.
My publisher's a woman, Gretchen Young, and she said, that's the trick. And so it has themes about parenting. It has themes about resiliency. It has themes about overcoming disappointment. There is a disappointing ending to the story. It's not Hollywood. It's disappointing to me, but it's formed. So I'm going to say that cliche. Almost everyone. Yeah. My niece read it to her 8-year-old for bedtime the other day. But so I think it'll appeal to a broad segment.
Come back.
Love to.
I feel like there's lots of lessons more that we could talk about. Michael Eck, author of Strike Season, joining us right now, founder too of Steer.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Businessweek Daily. That's Carol Massar, and I'm Tim Stenovec, taking a look at how we're looking on the S&P 500 today, down 0.2%. But I'm going to go ahead and I'm going to put this at 5 days, Carol, because that's what you got to look at.
Go.
Up 0.3%
You're just thinking about
for the S&P 500 this
5
week.
5 o'clock, 4 o'clock, and 5 o'clock tonight.
Why? 4 o'clock, I'm still here.
I know.
5 o'clock, I'm still here too. Month to date, though, we're up 4% on the S&P 500.
I know. Quite a bounce back.
Quite a bounce back.
Yeah, and if you look inside the S&P 500, I always like to do this just to get a feel of kind of breadth and just what's going on. 268 names are higher in the S&P 500 as we speak, 235 to the downside. So a little bit of that. We're getting ready for what? Fed minutes next week. We still have Nvidia earnings coming. We've got Jackson Hole.
Jackson Hole's the week after next week.
Yeah, exactly.
I've been talking to Mike McKee about it a little bit.
I know.
He's getting ready.
He's been polishing up those cowboy boots.
Okay.
Pulling out the hat. I'm Carol Masser, along with Tim Stenovic. Let's get to some stocks on the move. With us is Bloomberg News' Emily Grafeo here with Stock Movers. I love what you're starting with. This name is just on fire.
Yeah.
Well, not so much today. Is it? No, it is on fire.
SanDisk is on fire today. I actually think the last time I was in here, it was plunging quite a bit.
I was just going to say,
yeah.
It's so funny. I know.
It's up.
It is.
Almost 600% this year.
Yeah. Forgive
okay?
me. It's even on one of my gainers. It goes up and down.
It's been on an incredible tear, but
Today.
it also does go up and down. Right now, it's been up for the last 2 days. Actually, wait a second. I'm looking at the wrong thing. No, it's up about 7% right now, up for a 5th straight day, rallying over 35% this week, the largest gain since January. Like, what new here in the memory trade? JP Morgan initiated coverage.
Initiated?
Right? Like they initiated with an overweight rating. This following the firm's investor day, which happened yesterday. They announced their long-term financial targets through 2030. They see revenue growth in the mid to high teens. Here's what JP Morgan analysts had to say. SanDisk is in many respects uniquely positioned to capture the ongoing structural inflection in demand driven by rapid growth in the AI trade here. So, yeah, they're looking at another 47% increase from the last close in this stock.
Wait, you cover markets. Is that a little weird that they initiated?
Well, okay, it's only been a standalone public company since February of last year, since the winter of last year, 2025.
Yeah,
so
I guess that's
so maybe you were giving it some
understandable.
time to, see where it goes.
Yeah, I mean, if we have time to pull it up on ANR on the Bloomberg terminal, let's see. I mean, 27 buys, 4 holds, 0 sells. So usually the stocks that are like very big, very heavily traded have actually a couple more like ratings than that. So I guess some people are just coming on now.
That's fair.
Here's something notable, though.
What?
Ben Reitzis over at Melius Research has a $3,600 target price on the stock. It's at $1,600 right now.
Right.
Wow.
Yeah. So obviously thinking not so.
That's the street high.
Yeah.
I know.
Stock is the number one gainer in the S&P 500 by a wide margin. It's up
for the year.
For the year.
Yeah.
It's up almost 590%. All right. We're going to move on because we could keep going here.
We could go on this all day.
Let's talk about Reddit.
Okay, so Reddit is higher today. It's up about 12% right now, adding almost $4 billion in market cap. Yesterday after the close, it was announced it's being added to the S&P 500. So this is a classic index arb trade. It won't actually get added to the index for a few weeks.
Right.
And when that happens, trillions of dollars of passive funds have to all buy it. So before that happens, the fast money comes in, the hedge funds, the index arbors, they buy it first in the hopes that they can sell it for a quick profit when like a Vanguard mutual fund has to buy it.
They could use a little help, right? Shares of Reddit.
Reddit, yeah.
Just saying.
Down 20% this year.
Okay.
Roughly.
Okay.
The S&P 500 committee was ready to embrace them. So, I mean, it's a big deal for a company.
Look, we don't have time to get into it, but
14% of the float is short.
I would love to know.
Negative.
I would just love to know what went into like why Reddit. Like, I want to talk to an S&P 500
that would be a great
committee
segment.
member. Like, that's what I want to know.
Yeah,
What
they're
are they-
hard to get in touch with.
Oh, all right. Hey, call us.
Listen,
We're ready.
Sometimes it's based on the sector, the size. Like
we just want to know.
it's at $177 right now.
Yeah.
When it started trading, less than about 2 years ago at this point. Yeah, 2 years ago, a little over 2 years ago, $34. So.
Okay. Hey, let's go to Tesla.
All right, so finally, Tesla, not a big, move by a percent change, but it is higher. This headline caught my eye. The EV maker is planning to unveil a new Roadster with flying capabilities as soon as this month, according to a report. Okay. So
you said flying, and all I could think of was Dumbo.
I'm sorry.
The elephant.
I'm just thinking of a big car like with wings. Yes, I do know.
There
Dumbo.
is a Tesla orbiting. Elon Musk launched a Tesla Roadster in a SpaceX rocket. True, this is true.
Okay,
yeah.
I know.
So
I know.
there is one orbiting right now.
All right.
Yeah.
Yeah. So there's going to be this event coming up. We'll, I guess, see a flying car, maybe.
Hey,
the stock is higher.
It is a Friday.
Hey.
We're talking about flying cars.
And if it's Elon, don't ever rule him out.
Jetsons.
Exactly.
Jetsons,
Gonna
Carol.
say. All right, Emily Grafeo, thank you. Jetsons. Elroy. What was the robot's name? Rosie, thank you. Check out our Stock Movers podcast. 5-minute episodes, big winners and losers, funded on Apple, Spotify, or anywhere you get your podcast. Yes, it's Friday. The market's still trading. Another hour to go. If you're watching on TV, the close coming your way. Tim and I continuing on Bloomberg Businessweek Daily on radio.